Good morning, everybody. Hey, welcome to Tuesday. It is November 28th. Hard to believe. But yesterday was not much of a day. We'll talk about that more when Dave joins us here in just a few seconds. Before we do that, though, let's not forget that there's so much in this world that you and I, we have no control over. However, you can take control of your portfolios by knowing, one, how much risk do you have in your portfolio? And two, how much risk should you really have in your portfolio based on your circumstances? That's why we developed the core retirement design. Give us a call at 863-382-0037 to schedule your core retirement analysis. With that, we've got Dave next.
5.7 Light FM. That's the police there, Stinging Company. My name is Morning Dave. Appreciate you joining me. We're at 8:40 now, 20 before 9, and 'tis time to see what the heck's going on with the economy and with the markets and everything, and we do that each morning with the resources of Phillip Statler from Statler Financial Services in downtown Sebring, who's on the phone this morning. Phillip, good morning. How you doing?
Hey, good morning, Dave. Doing well today. It is the countdown to the end of November, and the news is getting pretty thin, isn't it?
Oh, good. Yeah, every once in a while, you and I have these mornings. We get on the phone together and say, "Sal, what do you want to talk about?" "I don't know. What do you want?" We kind of have one of those because everything's in a holding period. This week, we're waiting for two earth-shaking reports that are going to affect the markets and probably the Federal Reserve strategies. Tomorrow, we're going to get the next reading on the gross domestic product, which is going to be interesting, and then the day after that, we get the Federal Reserve's preferred measure of inflation, the personal consumption expenditures inflation. Today, we're basically reading tea leaves because, well, they're kind of in that open period where Federal Reserve governors can take advantage of the rubber chicken circuit, get free food before the law says they have to keep their yaps shut, and that invariably gives us kind of a herky-jerky day, doesn't it?
It does, right? Because everybody's going to be bending their ear to see what the Fed presidents are saying, hoping to glean just a little bit of information of what they think will happen in that meeting next week.
Absolutely. It's the 12th and the 13th, so we got 2 weeks from today, basically, that they start the next meeting. And the week beforehand, they're told they can't do any public statements, so they're all getting advantage and taking advantage of the free food today. You counted 4 of them that were speaking. I had 2, and it seems to be Michelle Bowman is the one that's been known to say, well, we really need to whack them harder. She's been a hawk, and I think Waller's been kind of on the dovish side as far as interest rates are concerned. So we're kind of looking at 2 different extremes among the ones that I know about.
Yeah, and the other one we got speaking is Austin Goolsbee and Michael Barr.
So they're going to have an awful lot of tea leaf reading. We got very little going on today in terms of indications. You got a new report from one of the banks projecting what the gross domestic product is going to do when we get the reading yesterday, and it squares up with kind of a minority report I was looking at yesterday when you said that your sources expected 4.9% to be what we get tomorrow in terms of a reading. You got somebody saying it's going to go up again, huh?
Well, we do. They take the median forecast right in the middle. So the median forecast went up from 4.9 to 5%. So, we'll just have to wait and see what actually happens tomorrow. But that's going to be an important number for the Fed to look at. The other thing that we had, when you and I talked yesterday, is the new home sales came out at 10 o'clock yesterday morning. And a lot less than expected. The expectation was that we'd have 725,000 new home sales in the month of October. And it was only 679,000, which doesn't sound like a big miss, but it's definitely going down. And that's a big drop from the 719,000 we actually had in September.
That's kind of a surprise given the fact that mortgage rates were trending down during the month as well.
It is, but I think maybe people are finally getting to the point where it's tough enough that if you don't have to go buy a new house, I think they're not, they're just holding on.
It may very well be. It's one of those things where we've got politicians on both sides of the fence, and on the Democratic side of the fence, they're telling us what an absolutely great economy it is. And all the indications we're getting on a macro side is, yeah, we're surviving this tight money period, but things are not exactly coming up roses on every front, are they?
They're definitely not. And, there's a lot of people that are still, really, having a hard time right now. And so the price is going up, and what you used to make used to go a lot further. And now it's hard to walk out of the grocery store without having to put it on your daggum credit card.
Absolutely. Other things that are going on, we mostly have re-ratings and interim reports and guidance revisions coming out from the companies that trade. We will have a few pretty good earnings reports today, among others, Workday and Hewlett-Packard Enterprise will be coming out later on today as far as something that might drive the tech industry. Shopify had an interesting report. Their stock went through the roof yesterday after the e-commerce platform said that merchants recorded $4.1 billion of sales on Shopify on Black Friday. That's not even one of the biggest of the e-commerce sites. So I had kind of a report that said that the brick and mortar stores had a mediocre but an increase over the Black Friday weekend. But internet commerce is still going gangbusters over the Black Friday through Cyber Monday, isn't it?
Yeah, and it may have had a good day yesterday, Dave, but they're getting cut today from neutral to underweight. So by Piper Sandler, and so that's putting some pressure on them. The Wall Street firm said that their shares are a hold. It's kind of a unattainable. They don't think they can get the valuation that they're valued at right now. Based on
that's kind of a common problem on all the internet stocks, isn't it?
Exactly. So they're trading down a little over 1.5% right now.
All right. By the way, I'm talking about kind of an increase, but a mediocre increase. MasterCard said that Black Friday spending in the retail sales industry on Black Friday, 2.5% from last year. That's not what the projections had in mind. They were originally talking about a 3.5% increase, which is still pale compared to the 7% we got last year. So when we get some reports out of the cyber economy, it's going to be kind of interesting to see whether or not we're keeping up a blistering pace just doing it all online, aren't we?
Well, yeah, that's true. And think about this, Dave. If they only saw a 2.3% increase, I wonder if that was volume increase or gross revenue pricing increase. Because if you figure most stuff costs at least 5 to 20% more than what it did last year. So if that's the case, people are buying less, right? Spending the same
quantity.
Yeah,
definitely. Because that was the MasterCard people saying that. So all they're doing is talking about gross dollars spent. And your point taken. Yep. If it only goes up by 2.5%, well, odds are the cost of goods sold was up by 8%.
Exactly.
That doesn't sound good, does it?
No, it really doesn't. So it's going to be interesting to see how those numbers fall out as we continue to watch the retail industry.
Absolutely. Not anything in terms of the macroeconomic stuff coming out today, and the only major report that's likely to move anything to speak of is the Conference Board Consumer Confidence number. It was 100. It's expected to be down a little bit from the prior month. So I don't know whether or not that's going to move us very much or not. I got a sneaking hunch what we're going to do is do a little bit of profit taking today and not too terribly much more.
Yeah, yesterday, Dave, you were talking about some banks and analysts coming out with their predictions for 2024. Well, Wells Fargo equity guy has come out with his projection for 2024. And the headline was he expects a really, really sloppy first half for stocks in 2024. So I thought that was a kind of interesting. But his call is to the S&P 500 to end 2024 at $4,625.
Boy, would that be impressive. It's $4,550 this morning.
Yeah, exactly. not much of a boot, but they said his call for 2023, the market S&P would have to drop 3% to hit his target for 2023.
In other words, he doesn't have a really good track record, does he? Yeah, those numbers that we had yesterday were pretty much in the range. Dead flat at 4,500 at the end next year, or 5,000 at the end of the year next year, which doesn't sound like much because the popular press talks about the Dow in the 35,000 plus range, and the S&P, a move from where we are right now up to 5,000 would be about a 10% increase. And in terms of smoothed average, that's what the market as a rule tends to do on a regular basis. So that would be pretty much a normal year if the high-end estimates are right. On the other hand, they're all bunched around the bottom, too, and that says basically dead flat next year, which doesn't make anybody very happy in equities, does it?
Yeah, it really doesn't. I was looking ahead a little bit to see what kind of earnings we might have. I know today, after the market closes, we have Intuit. You know, that's the maker of QuickBooks and that company. We have the Dollar Tree that will report before the market tomorrow morning. So that one might be a little bit interesting. So that Five Below reports tomorrow after the market closes, and then you got Foot Locker before the market. So we've got some retail guys still coming out this week.
It'd be interesting because, but between Five Below and Dollar Tree, we're talking about a real measurable share of the low-end discount market.
That's right. So I mean, that could be really, if they're off, that could be a telltale sign.
Yeah, not a good one for sure. Resetting the table for the morning, it was that profit-taking day yesterday. Everything was red, but it wasn't particularly red. The Dow lost 57, Standard & Poor's lost 9, NASDAQ was down by 9.5 or so. Like I said, it was red, but it was more pink than red in the context of the market that we're into these days. 45 minutes before we open this morning, what are we looking at, sir?
Dave, we still have another tinge of red across the board for the indexes. You know, the Dow 30 is down $15 right now. The S&P 500 is down 7. NASDAQ 100 is down 24. So everything's, you know, somewhat in the red. We'll have to see how things open up at 9:30. But then the other side of the coin, we've got silver up 0.25%. It's trying to get to 25, Dave. It's at $24.74 right now. And then gold's up 0.4% to 20.20 per ounce. And then you got crude oil up from where it was yesterday. It's up about 0.5% to $75.25 a barrel right now.
Well, it still feels cheap compared to the $80 numbers we were looking at a few weeks ago. I'm trying to put some lipstick on the pig. Looking overseas markets, the Asian Rim was mixed. About the only really decided move that we had at the close at 6 a.m. was Hong Kong. I suspect nervy about the growing tensions between Taiwan and China. They were off by like a full percent. Everybody else off by 1/3 to 0.5% at the close this morning, with a couple of ups like South Korea being up by a full percent. The European market pushed the wrong button. There we go. Off, but evenly off by in the 1/3% range halfway through their trading day. Trying to keep tabs on all of this and plan for a retirement takes eyes that the average guy doesn't have. That takes somebody with the contacts and the information to do it right. How do I get my retirement back on track with help from you, Phillip?
Dave, those are the exact reasons we developed the core retirement design to help people design that retirement they always dreamed of by looking at the risks they have in their portfolio. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730, 95.3 FM.
Hey, and you and me back together again, same time tomorrow morning here on Light. We'll see you then.
All right, have a great day.
Thanks, Phillip. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Folks, again, I want to thank you for joining us today. Remember, risk is the key thing that you can control within your portfolio. Give us a call to schedule your core retirement analysis, 863-382-0037. Hey, with that, join us again tomorrow, same time, same place. Have a great day.